Good morning, everyone. So we have already studied the TDS portion from this chapter. Now the next component is income payable net of tax. Now what is net of tax? Say for example, it is the responsibility of payer to deduct tax from the amount payable to pay, right? So it is expense to payer and income to pay, right? But when as per the agreement, if the tax component, is to be bear by payer, then it should be net of tax. Okay, say for example, Mr. Reliance entered into an agreement with Google that Reliance will make payment for services obtained from Google, say for example, 1 lakh rupee. Now Google and Reliance agree that what Google wants, I need 1 lakh rupees net of taxes. Whatever is the tax component, that should be bear by Reliance. So this amount is net of tax, right? So we know on professional service, the rate of TDS is 10% under section 194J. So say for example, if the value of service is 100 and the TDS is 10, then after tax, the value is 90, right? So it is that 90%. Okay, so we have to gross up this value, that is 1 lakh divided by 90%. It comes to 1,11,101. It is the gross value of service, okay? And 10% of this gross value comes to 11,111. It is TDS component, and the resulting figure is net of tax 1 lakh. So this 11,111 rupees will be bear by the Reliance only. Okay, so whenever it is given that the payment should be net of tax, you have to gross up, and after that you need to calculate the TDS amount. Clear, everyone? Next is interest or dividend or other sum payable to government, Reserve Bank or certain corporations. So if you are making payment to government, Reserve Bank of India and certain corporations notified by the government, then in that case, TDS is not required to be deducted. Say for example, if you are paying dividend to the government, then in that case, TDS is not required to be deducted under section 194. Say for example, you are paying interest on deposit to the government, then in that case, TDS under section 194A is not required to be deducted. This provision for non-deduction is applicable when such sum is payable to the above entity by way of interest or dividend owned by the above entity, and if they are fully beneficial and if they have full beneficial interest. Okay. Next is certificate for deduction of tax at lower rate. Now we have already discussed in various sections, there are various rates are given. Say for example, under section 194A, 10% rate of TDS is given, interest other than interest on securities. 194 dividend, 194C, there are two rates, 1% if the payee is individual or HUF. If the payee is other than individual HUF, then 2%. 194H commission, there is a 5% rate. Right. So we have already discussed the various rate of TDS. But in case, say for example, my income, let's say my income is 6 lakh rupees. And this entire income is related to professional receipt. Okay, it is more than 30,000. So payer will deduct TDS at the rate of 10% under section 194J. So he will deduct TDS 60,000 and he will give 5,40,000 to me, right? Now my income is only 6 lakh. Okay, it is chargeable to tax. Say, for example, I have not obtained for any deduction under Chapter 6A or nothing is available, right? So, what is the tax on 6 lakh rupees? Yeah, let's say for example, I have claimed deduction of 1 lakh under 80C. That is LIC premium. Now, my net income chargeable to tax is 5 lakh rupees, right? On 5 lakh rupees, tax liability is 12,500. My net income is 5 lakh rupees. So am I eligible for rebate under section 87A? Yes or no? Everyone? Yes or no? So rebate under section 87A is available. So my net tax liability comes to nil. But already the payer has deducted TDS of rupees 60,000 and deposited the same to the account of government on my behalf. Now what happened? I need to file return of income. I need to wait for a refund, right? So government has provided this provision that if income is below taxable, then you can apply for no deduction or deduction of tax at source at lower rate to the government. So I can apply nil rate of deduction to the government that as my income is as at the year end, I have no tax due to the government. So kindly give us the certificate for no deduction of TDS. So if the assessing officer agree and if assessing officer provide the certificate to me, then that certificate I need to submit to the payer. And based on that certificate, the payer will not deduct TDS. And say, for example, government is assessing officer is allowed the rate of TDS at the rate of 5%. So on the basis of that certificate, the payer will deduct TDS under section 194J at the rate of 5% instead of 10%. Clear, everyone? So this you can apply for this certificate if your tax is deducted under section 192 salary, 193 interest on securities, 194A, 194C, 194G, H, I, J, right? Madhav, kindly refer rebate under section 87A. It is before says. If your income is less than 5 lakh, then 12,500 is rebate is available. And after rebate, my tax liability is 0. So there is no health and education cess of 4%. Next is no deduction in certain cases. Section 197A, enabling the provision for filing of declaration for receipt of NSS payment and dividend without deduction of tax. See, here two sections are covered where you can apply for no deduction. Here you need to give declaration to the payer in duplicate form. The form and the manner of submission is already provided. So we have already studied section 194 dividend and 194 withdrawing more than 2,500, then NSS will deduct TDS, right? So in that case, if you are providing declaration in duplicate form in the prescribed form, then the payer will not deduct TDS under section 194E and 194EE. In above, we need to apply to the assessing officer for lower rate or zero rate of TDS. Okay, here we just need to apply to the payer. Now, declaration in case of section 192A, that is with premature withdrawal of EPF, Employee Provident Fund, 193, 194A, 194D, 194DA, 194D Insurance Commission, DA payment from life insurance company, 194I rent, and 194K income from mutual fund. Other than companies, and firm. So this provision is applicable to individual and HUL. Okay. They can also apply in writing in duplicate form, in duplicate copy in the prescribed form that our income is less than nil, taxable income is nil. So kindly deduct TDS at 0%. That is non-deduction of TDS. You cannot file that declaration if your aggregate income from dividend, NSS, premature withdrawal from provident fund, interest on securities, interest other than interest on security, insurance, commission, life insurance, rent, etc. If your aggregate income from all these sources is more than 2,50,000, that is basic exemption limit. 3 lakh in case of senior citizen. So if aggregate of all the income is more than 2,50,000, that is basic exemption limit, then you are not eligible to apply to the payer for zero deduction of tax under the above provision. This exception is not applicable to the senior citizen. So if you are senior citizen, then also you can apply for zero deduction even if your income exceeds basic exemption limit via form 15G 15H. Okay. So in that case, they will not deduct TDS. Everyone clear with this? It is a procedural thing. Non-deduction of tax in certain cases. Interest payment by an offshore banking company to non-resident or not ordinarily resident in India. Then in that case, TDS is not applicable. If amount is paid by NPS trust, then also new pension scheme trust, then also TDS is not applicable. Government will. Everyone clear up till now? Yes or no? Please reply. Government have power via notification. They prescribe the notified person or class of person when no TDS is required to be deducted. Just like they have prescribed that if the payment is made to the government RBI, then TDS is not required to be deducted. Okay, clear everyone? Yes or no? Yes or no? Please reply fast. Offshore banking company means a person is having a relationship or that company or individual. You have the finance outside India, that is outside the country of your residence, that is offshore banking. So next is miscellaneous provisions. Tax deducted is income received. Tax deducted is your income, right, my dear friend? Say for example, in above case, say for example, if someone is paying 1 lakh rupees professional fees to me, then he deduct TDS at the rate of 10%. That is the amount of TDS is 10,000. In my bank account, I get 90,000. But what is my income? 1 lakh or 90,000? Everyone, what is my income? I generated invoice. I issued invoice of rupees 1 lakh. XYZ firm will make payment after deduction of 10% TDS, that is 10,000 TDS. So in my bank account, I get 90,000 rupees. Now, what is the income in my hand? Is it 1 lakh or it is 90,000? The income is 1 lakh, right? Because this 10,000 is deposited on my behalf to the government. Whenever I will file my return of income, and if my tax liability comes to zero, then I'll get the refund of that 10,000. Whenever my tax liability arise, then I get credit of that TDS. Okay, so I need to pay less to the government because already 10,000 is deposited to the to the government on my behalf, right? So income is 1 lakh rupees, everyone. So the TDS deducted is also considered to be a income. However, this is not applicable in case if the employer has deducted, employer will want TDS tax on non-monetary purposes and TDS deducted under 194N. 194N is cash withdrawal. Okay, so cash withdrawal is not your income. Now, say for example, XY, in our case, XYZ firm has deducted TDS, right, on my behalf. Now, how will I get to know that the XYZ has deducted TDS and deposited the same to the government? So for that, there is an online mechanism and the payer need to provide certificate to the payee that on this much of amount we have deducted as TDS under this section and deposited to the government. Okay. So tax deducted at source in accordance with the above provision and paid to the credit of central government shall be treated as payment of tax on behalf of person from whose income the deduction was made. So it is tax deposited on my behalf. I have already explained to you this owner of security. If the interest on it is TDS on interest on security, then in that case it is on behalf of owner of security, depositor, owner of property, unit holder, shareholder, etc. Right? Credit for tax deducted at source for purpose of section 199. Now, my dear friend, you need to inform to the government that you have deducted this amount of TDS on behalf of this person, right? So that government will know and government will give credit of that tax to the payee. For that, to whom the credit is available? So to the person whose TDS is deducted. The person whose TDS is deducted, the credit is available to that person, right? So Rule 37BA1 provide that credit for tax deducted at source and paid to the central government would be given to person to whom the payment has been made or credit has been given, that is deductee or payee. On the basis of information, Madhav, if your TDS is deducted under 194, then you will get credit of that TDS. That's why it is reflected in your form 26 AS. Otherwise, how will you know that how much TDS is that you cannot claim the credit? Clear? Yes or no? Please answer fast. Madhav, please reply. Now, for example, you have already studied the provision of clubbing. In clubbing, say for example, Mr. X has given 20 lakh rupees to Mrs. X. Okay. And Mrs. X has deposited this 20 lakh to bank as fixed deposit. And Mrs. X will earn 2 lakh as interest. Okay. Now, on fixed deposit, if the interest is more than 40,000, then bank will deduct TDS under section 194A. Sorry. So here the interest amount is more than 40,000, is 2 lakh rupees. So bank will deduct TDS at the rate of 10%. That is 20,000 rupees. TDS is required to be deducted by bank. Now, as per the provision of clubbing, if an individual give to his spouse and income on that cash amount is taxable in the hand of transferor spouse, that is Mr. X. Okay. Yes or no? At the time of 20 lakh gift, no tax is required to be paid by Mrs. X under section 56(2)(10) because it is outside the purview of section 56(2)(10), gift to relative. But if Mrs. X earn any income on that fixed deposit, then it is taxable in the hand of Mr. X, that is transferor spouse. Yes or no? Everyone clear with the provision of clubbing? Now here, the deposit is made by Mrs. X. So bank will deduct TDS on account of Mrs. X, right? Sorry. But the income is taxable in the hand of Mr. X, right? This income is not reflected in return of income of Mrs. X because by provision, by way of clubbing, it is taxable in the hand of Mr. X. But bank has deducted TDS on account of Mrs. X. So in that case, how Mr. X will get the credit of this 20,000 TDS because income is offered by Mr. X only, right? So the provision is provided under Rule 37BA that if the credit is given to other person because the income is offered in other person's hand, that is in Mr. X, then the deduct, then Mrs. X will intimate to the bank that TDS is required to be deducted on account of Mr. X because it is taxable in the hand of Mr. X only. Okay, so bank will deduct TDS on account of Mr. X. Clear everyone? Yes or no? So here it is given. Deductee should file declaration with deductor and the deductor should report tax deduction in the name of other person in the information relating to deduction of tax referred to in Rule 37(1). Clear? Now, whatever amount of TDS is deducted, the credit of the same is given in the year in which the income is assessable. Now, say for example, if the income is assessable over number of years, say for example, it is assessed for 3 years, then proportionate TDS credit is given 3 years only. Okay. But the same is not applicable with respect to section 194N, that is TDS on cash withdrawal. Madhav, if you are not offering income, then government will not give credit of TDS on the same income. If I am not offering that 2 lakh rupees in my return of income, then government will not provide that credit of that TDS to me. Okay, clear, Madhav? Please reply yes or no. Duty of person deducting tax. The person responsible for deducting the tax at source should deposit the sum so deducted to the credit of central government or the board direct within the prescribed. Now you, as a payer, you have deducted TDS of someone, right? But you need to deposit the same to the government. Then the time limit is given. Say, for example, Reliance has deducted TDS under section 194G. Then TDS, the Reliance should be deposited that TDS to the account of government within 7 days from the end of month in which TDS is deducted. If the payment is made through income tax challan. If payment is not made through income tax challan, then TDS is required to be deposited on the same day. Now, say for example, if TDS is deducted in the month of August, then it should be deposited to the government on or before 7th September. That means TDS is required to be deposited to the government on or before 7 days from the end of month in which TDS is deducted. Clear? Now, in case if the TDS is deducted in the month of March, now if the TDS is deducted in the month of March, say for example, if TDS is deducted in March 23, then this TDS need to be deposited to the government up to 30th April 23. It is the 1 month relaxation, 1 month time period frame is provided only in case of March. Other than March, so April to February, if TDS is deducted, then it should be deposited within 7 days from the end of month in which TDS is deducted. But if the TDS is deducted in March, then it should be deposited to the government up to 30th April. Clear, everyone? Due date for deposit of TDS. Now, in special cases, you can apply to the assessing officer. An assessing officer with the prior approval of joint commissioner allow you to make payment of TDS quarterly. Allow you to make payment of TDS quarterly under section 192, that is salary, 194A, interest other than interest on security, 194D, insurance commission, 194H, general commission. Right? Madhav, it is online process. The entire process is not given in your syllabus for filing TDS return. You will study that in your articleship. You need to file TDS return online. The name of forms are given for your knowledge. You no need to remember the name of form for your exam. 7th day of following month, na? Shudhanshu, in my case, TDS is deducted in the month of August. That's why the due date is 7th September. If TDS is deducted in the month of July, then the due date is 7th of August. If TDS is deducted in the month of April, then the due date is 7th of May. Clear? So you can make payment quarterly with the permission of assessing officer. Clear? Yes or no? We have already studied that under section 194 IA, IB and N. You no need to apply. No need to apply for 10. You can file the return on the basis of PAN only. You need to file that Chalan come statement within 30 days from the end of month in which TDS is deducted, right? And the form is 26 QB for 194A, 26 QC for 194 IB, 26 QB for 194M, right? You can make the payment of TDS through online or through check. The following persons are responsible for preparing such statement for the period as may be prescribed after paying tax deducted to the credit of government within the prescribed time. And if the deductor, that is the payer, is required to prepare the statement, and the statement needs to be report to the government. That is the TDS return. TDS return. In TDS return, you need to provide the detail of pay, name of pay, PAN, right? Section under which TDS is deducted, amount of service rendered, and amount of TDS. Date of deduction of that TDS and date of deposit of TDS to the government. Clear? This TDS return need to be filed quarterly. Now, say for example, while filing the return, someone made a mistake. Then you can also rectify your mistake in TDS return. You can file rectified return of TDS. Okay. It may possible that if the data is bulky, you forgot someone's PAN, or you enter the wrong PAN, wrong date of deduction, then you can rectify your mistake by filing revised TDS return. Now, due date for filing. So the form 24Q, that is TDS return 24Q, is need to be filed in case if the TDS is deducted under 192, that is salary. Other than salary, form 26Q is required to be filed. And in case of non-resident, 27Q is required to be filed. So if you have deducted TDS under section 194J, if you have deducted TDS under section 194J, then form 26Q is required to be filed. Due date for filing TDS return. The TDS return required to be filed quarterly. So first quarter is April, May, June. Return filing is up to 31st July. Or no, you can rectify return at any time, Madhav. Second quarter end on July, August, September. The due date is 31st October. Third quarter is October, November, December. The due date is 31st January. January, February, March quarter. The due date is 31st May. See, for first three quarter, the due date is 1 month after the end of quarter. Within 1 month after the end of quarter. But in case of March, the due date is 31st May. Clear, everyone? Yes or no? Please reply fast. Yes or no? Please reply fast. Now, correction of arithmetic mistake and adjustment of incorrect claim during computerized processing of TDS statement. Just like when you file your income tax return, the centralized processing center, that is CPC, will verify your return and process the same in their software. And if there is any mismatch, they will issue notice. Same way, same way, the TDS department will process your return electronically. Okay. And if there is any error, just like say for example, I have mentioned the section 194J, but deducted TDS at the rate of 2%. So there is short deduction of TDS. Right. Sudhanshu, there is no due date for filing return of TDS in the month of May, except the last quarter end. The 2 months are given because for the March is your closing year, right? So for deposit of TDS, they have provided 1 month. That is, if the TDS is deducted in the month of March, then you can deposit the TDS to the government up to 30th April. That's why they have provided 1 month extra to file TDS return. Clear? Bhumika, Sudhanshu, yes or no? Please reply fast. So if there is any error, then the government, that is the TDS processing center, will issue the notice to you that this error is reflected in your TDS return. Kindly rectify the same. Now, say for example, I have deducted TDS at the rate of 2% instead of 10%. So there is short deduction of TDS. There is short deduction of TDS. So I need to pay interest on short deduction of TDS. Now, say for example, if I miss the due date for TDS return, if I miss the due date of TDS return, then there is late filing fees of TDS return, that is 200 for every day. 200 for every day. So if the for first quarter, that is April to June, due date is 31st July for TDS return. It depends on your system of accounting. Varsha, when we deduct TDS, it is depend on the section in which TDS is deducted, right? And TDS is deducted by payer, so it is always an expense on account of payer. So the whatever system of account method of accounting followed by pay, it is none of our business. If as per say for example, if I need to pay commission, then TDS on commission is required to be deducted payment or credit, whichever is earlier. So if I pass the entry in the books of account, I need to deduct TDS on that. Clear, Varsha? Yes or no? Varsha, clear? Now, say for example, I have filed return on 5th of August. So there is delay of 5 days. So I need to pay late filing fees 200 rupees per day for 5 days. That is 1000 under section 234E. Under section 234E. Clear? However, this late filing fees should not be more than your TDS amount. If my TDS liability is 800, if my TDS liability is 800, then late filing fees should be restricted to 800. So late filing fees should not be more than the amount of tax deducted. Clear, everyone? Yes or no? Madhav, you will get refund of TDS or not, that depend on your final tax liability. Say for example, my tax liability comes to 1 lakh and my TDS deducted 80,000, so I need to pay 20,000 to the government, right? But say for example, my TDS deducted 1 lakh, but my tax liability comes to 60,000, then I'll get refund of 40,000. So it depends on your final tax liability. It is not depend on the source in which you offer the income. It depends on your final tax liability. Clear? Yes or no, Madhav? Now, after processing your return, the CBDT, the officer, the processing center will provide you the intimation that the return is proper or if there is there any problem or anything else, right? And if you have deposited more TDS, then the payer will get the refund of that TDS. Consequences of failure to deduct or pay. Now, as a payer, it is your responsibility to deduct TDS, right? But if you fail to deduct TDS as per the TDS provision, then yani as payer will considered as assessee in default. The payer is considered as assessee in default and actions are taken against the payer for non-deduction of TDS. Any person, including principal officer of company, who is required to deduct any sum in accordance with the provision of the Act or an employer paying tax on non-monetary perquisite under Section 192, subsection 1A, shall be deemed to be assessee in default if he does not deduct or does not pay, or after deducting, fail to pay the whole or any part of tax. Say, for example, you need to require TDS under Section 194J, but you have not deducted the same. Then payer will consider it as assessee in default. Now, if you have already deducted TDS, if you deducted TDS now, then what is your next duty? To deposit the same to the government? Yes. But you fail to deposit the same to the government. Then also you are considered as assessee in default. Now, in which scenario the payer will not considered as assessee in default? Now, in which scenario, if the payee has furnished his return of income under Section 139, if the payee, it is duty of payer to deduct TDS and deposit the same, but payer has failed to deduct TDS, then in that case, payer will not consider as assessee in default if payee, say for example, Reliance is required to deduct TDS, but Reliance has not deducted TDS on account of Mr. X. Now here the payer is Reliance and the payee is Mr. X. So now if Mr. X has filed his return within due date, if Mr. X has already considered that amount as income on which TDS is required to be deducted in his return of income, and Mr. X has already paid tax on that income while filing return of income. And for this effect, the payer need to obtain certificate from chartered accountant in the prescribed form that the payer has already offered that income in his return of income and he has already paid tax on that income. Then only the payer will not consider as assessee in default. Otherwise, payer will consider as assessee in default and actions are taken against the payer. Is that clear, everyone? Up till now, it is clear. So we'll move forward to interest liability. Yes or no? Please answer fast. Yes or no, everyone? Please answer fast. Yes or no? Please reply fast. Now, interest liability. If the assessee, that is the payer, is considered as assessee in default, he need to pay interest or the prosecution are initiated against the payer if he is considered as assessee in default. Now, if a person is considered to be assessee in default, then he need to pay interest, simple interest at the rate of 1% for every month or part of the month on which TDS rate is required to be deducted but not deducted. Say for example, with 6.5. 6.5 says that if a payer is, say for example, if Reliance is paying professional fees to the Mr. J, then Reliance is need to deduct TDS under section 194J. But if Reliance failed to deduct TDS under section 194J, then Reliance is considered as assessee in default. Now, if Mr. X, that is the payee, has already filed his return of income within due date and offered that income which received from Reliance in his return of income and already paid tax on that income, then only Reliance will not consider as assessee in default. Clear, Krishna? My dear friend, if payer will fail to deduct TDS, then payee will not pay TDS. He will pay self-assessment tax or advance tax on that income. Because while calculating your final tax liability, you need to calculate, you need to consider that income, you need to calculate tax liability, and if there is no TDS is deducted, then the tax liability should be paid by you because ultimately it is your income. Clear, Sudhanshu? You cannot say that the payer has not deducted TDS on this income, so I will not pay tax on that income. Clear? Now, say for if a person is required to deduct TDS and if he failed to deduct TDS and he deduct TDS later. Say for example, you need to deduct TDS in the month of July, but you have deducted TDS in the month of next February. So there is late deduction of TDS, yes or no? The TDS is required to be deducted in the month of July, but TDS is deducted in the month of February. So there is late deduction. July, August, September, October, November, December, January, February. So you need to pay interest on TDS amount at the rate of 1% per month. 1% per month. Now say for example, if you have deducted TDS but failed to deposit the same to the government within due date. Say for example, if you deduct TDS in the month of February, then what is the due date everyone for deposit to the government? If TDS is deducted in the month of February, then what is the date for deposit of TDS to the government? 7th of March, 7th of next month, yes or no? Yes. But you have not deposited. You deposited the same in the month of June. So in that case, 1.5% interest is required to be paid by you. Okay. So if you fail to deduct TDS and the TDS is deducted later, then 1% interest is required to be paid. If you deducted TDS but failed to deposit the same to the account of government, then 1.5% every month interest is required to be paid. Chalo, let us discuss illustration number 13. You will get better understanding. An amount of 40,000 was paid to Mr. X on 1/7/22 towards fees for professional service without deduction of tax at source. Now on professional service, section 194J is applicable. Under section 194J, they have written that at the time of payment or credit, whichever is earlier, you need to deduct TDS. So the date of credit is not given. Therefore, Kavita, 200 rupees is late filing fees. It is for TDS return filing, not for deduction of TDS. So now the 40,000 payment was made on 1/7/22. So TDS is required to be deducted on 1st July 22 at the time of payment because the date of credit is not given. Yes or no? So here TDS is required to be deducted on 1/7/22. But the payer has not deducted. Subsequently, another payment of 50,000 was due to Mr. X on 28/2/23. Now here the second payment, for second payment, the due was given. That is the credit, right? The credit is earlier? Yes. So in case of second payment, the 50,000 bill was received on 28th February 23, from which tax at 10% amounting to 9,000 on the entire amount of 90,000 was deducted. See, first payment 40,000 rupees made, second 50,000 was due. So total is 90,000. Now from this 90,000, on 40,000, TDS is required to be deducted on 1/7/22. And on 50,000 was due in the month of due in the month of February. So TDS is required to be deducted here on 28/2/23. Right? But on this amount, the TDS is deducted on 28/2/23. But on this 40,000 rupees, TDS is required to be deducted on 1/7/22, but actually deducted on 28/2/23. But actually TDS deducted on 28/2/23. Yes or no? So here late deduction of TDS. Yes or no? Is there any late deduction of TDS? Yes or no? Yes. On 40,000, TDS is required to be deducted on 1st July, but actually the TDS was deducted on 28th February 23. So there is late deduction of TDS. For how many months? 8 months. Right? So here the simple interest 1% is required to be paid by payer. Simple interest 1% is required to be paid by payer. So on 40,000 the TDS comes to 4,000. Right? On 40,000, what is the amount of TDS? It comes to 4,000. Now on 4,000, 1%, 4,000 into 1% into 8 months. 4,000 into 1% into 8 months. Right? So my interest comes to 320 rupees. Is that clear, everyone? Yes or no? Everyone clear? Yes or no, please reply. Just a minute. Everyone clear? Now, the TDS is deducted on 28th February 23. Now, the same is required to be deposited to the government up to 7th March. Yes or no? The same is required to be deposited to the account of government up to 7th March. Yes or no? Because TDS is deducted. Everyone, yes or no? So now TDS is deducted on 28 to 23 amounting to rupees 9,000. The same is required to be deposited to the government up to March, right? But the same was deposited on 22nd June 23. But the same was deposited on 22nd June 23. So actual deposited. So March, April, May, June. There is late deposit 4 months. Yes or no? So on 4,000, on 9,000, 9,000 is TDS amount. We need to pay 1.5% interest per month for 4 months. That comes to 540. So total interest is required to be paid 860. Everyone clear with this? Yes or no? Yes or no, everyone? Please reply. Yes or no? Chalo, great. Now, time limit for person deeming to be assessed in default for failure to deduct tax at source. Now, the government will issue order to you. That is, the income tax department will issue order to the payer that he will assess in default if he pay to deduct TDS. So, the government will not issue. That is, income tax department will not issue order after expiry of 7 years from the end of financial year in which payment is made or credit is given, or 2 year from the end of financial year in which correction statement is filed, whichever is later. So government, after expiry of 7 year from the end of financial year in which payment is made, the government, when the income tax department is not eligible to issue an order for assessee in default. Now the time limit for issuing order for assessee in default is given, but there is no time limit is given if the assessee after deducting TDS has not deposited the same to the government. So time limit for that is not given. So in that case, if the TDS is deducted but not deposited to the government, then in that case, the income tax department will give order at any time and will take action at any time. Deduction of tax. A recovery of tax deducted is only one method. Assessing officer can also opt for any other method for recovery of tax dues from the payer. Now, it is responsibility of payer to issue a certificate to the payee that this much amount of TDS is deducted, right? So for that, in case if the TDS is deducted under section 192, that is on salary, then the employer will issue form 16 to the employer will issue form 16 to the employee that on this amount of salary, that much taxes deducted. Darshan, he should require to pay, but he has not paid. He paid later. So he need to pay interest. You can pay late along with interest, even if financial year ended. And other than salary, if under any other section your TDS is deducted, then the payer will issue form number 16A. Okay, form 16 is issued by employer to employee annually by 15th June of the financial year. Payer, obviously, Madhav, it is responsibility of payer to deposit TDS within due date. He failed to deposit the same, so interest liability should be borne by payer only. Why payee should bond? Clear, Madhav? And form number 16A should be issued quarterly by payer within 15 days from the due date of furnishing TDS statement. This we have already discussed so many times. The entire process of TDS return and forms are given, but you no need to remember the rule number and form number for examination purpose. Person responsible for paying taxes deducted at source. Who is responsible for paying tax deducted? Payer, right? Payer is responsible to pay tax deducted to the government because payer has deducted the tax. So here the nature of income is given and the person responsible for paying tax is given. So salary. So in case of salary, who is liable to deduct tax? Employer, right? And if the employer is a company, then company itself or principal officer. Interest on securities. So the payer of interest on security, that is local authority, corporation, company. Any sum payable to non-resident Indian representing consideration for transfer by him then also the payer is required to pay interest with Darshan. And if the payer fail to deduct TDS, my dear friend, you have already studied PGBP chapter. Under section 40A IA, 30% of expenses disallowed. So why payer will not deposit the TDS? Because the state where 30% expense is disallowed and with 30% expenses profit will increase and he will require to pay additional tax on that. In case of any sum payable to non-resident Indian representing consideration for the transfer by him of any foreign exchange asset which is not a short-term capital asset. So the TDS is required to be paid by authorized person responsible for remitting such sum to non-resident account. Furnishing of information relating to payment to non-resident, non-corporate non-resident or to foreign company. Any sum, whether or not chargeable. If you are making any payment to non-resident, then payer itself is required to deduct TDS. And if the payer is a company, say for example, you are paying dividend to non-resident, then company, the principal officer of company is required to deduct TDS. Credit or payment of any other sum chargeable under the provision of Act. So the payer is required to deposit TDS, or in case payer is the company, the principal officer of the company. So here the list of income and the payer is given. In majority case the payer, or in case if the company is a payer, then principal officer of the company is required to deduct TDS. Now, furnishing of statement in respect of payment of any income to resident without deduction of tax. This provision is applicable to banking company. Now, even if, see, in case of 194A, what we have discussed that if the FD interest or recurring deposit interest is less than 40,000, and in case of senior citizen, if the same is less than 50,000, then in that case, the TDS is not required to be deducted under section 194A, right? Even if TDS is not required to be deducted, the bank needs to provide this information in the statement that this amount of interest is earned by Mr. X or Mr. Y or any person. So the government will make trace of record that that much interest is earned by Mr. X or Mr. Y or anyone. So even if TDS is not required to be deducted, banking company need to provide statement to the income tax department that we have paid this amount of interest to this person. Yeah, this is applicable only in case of banking company. Other than banking company, TDS, say for example, if I am rendering professional service of 20,000, then the payer is not required to deduct TDS. So in that case, payer is not required to intimate to the government that he or she has paid 20. Need to provide a statement to the government, even if TDS is not required to be deducted. Now, section 206AA, we have already discussed the deductee or the payee should compulsorily provide his PAN to the payer. His PAN to the payer. Yes or no? If PAN is not provided, then TDS is required to be deducted at the higher rate. That is, rate prescribed in the Act, rate in force, that is the rate mentioned in Finance Act, or 20%. 5% in case of 194O, that is e-commerce operator, and 194Q in case of purchase of goods, instead of 20%, whichever is higher. So if payer has not furnished PAN, then TDS is required to be deducted at payee need to provide his PAN to the payer, right? Now this provision, government has introduced this provision before 2 years. Say for example, if a person has not filed his return of income of last year and the due date of filing return of income has already lapsed, and in last year, if his TDS is more than 50,000, say for example, Mr. X has not filed return of income for previous year 21-22. Okay, and filing return of income for previous year 21-20, due date for filing return of income for previous year 21-22 has already passed. So and in previous year 21-22, total TDS on account of Mr. X has deducted more than 50,000. More than 50,000. So in current year, whatever amount paid to Mr. X, the TDS is required to be deducted at higher of the following rate. That is twice rate prescribed in the relevant provision of Act, twice rate in the rate in force, or 5%, whichever is higher. So here the definition of specified person is given. If this section and section 206AA both are applicable, then you need to deduct TDS on higher rate, whichever is higher, 206AA or 206AB. Specified person means a person who has not furnished the return of income for assessment year relevant to previous year, immediately preceding the financial year in which tax is required to be deducted, for which the time limit for furnishing return of income under section 139(1) has expired, and the aggregate of tax deducted at source and tax collected at source in his case is 50,000 or more in the same previous year. So say for example, in previous year 21-22, total TDS is deducted on account of Mr. X 60,000. And Mr. X has not filed return of income for previous year 21-22. And the due date for filing return of previous year 21-22 has expired. So now in previous year 22-23, whatever amount paid to Mr. X by the payer, then payer will deduct TDS at higher of rate prescribed in section 206AA if PAN is not provided, or 206AB if PAN is provided. Say for example, Mr. X has provided his PAN to payer and TDS is required to be deducted under section 194J. Now, normally TDS is required to be deducted at 10% under 194J, right? But as per section 206AB, if Mr. X has not filed his return for previous year 21-22 and in previous year 22-22 his total TDS deducted was more than 50,000, then in previous year 22-23 payer will deduct TDS at the rate of 20%. That is twice. The rate prescribed in the section. Clear, everyone? Madhav, for that purpose, you need to offer income in subsequent year. If you are offering income in subsequent year, then you can claim TDS in subsequent year. But if you are not offering that income, then you cannot claim TDS. Is that clear, everyone? Yes or no? Everyone clear up to TDS provision? After that, we'll start advance payment of tax. Yes or no? Please reply fast. Yes or no? Now, advance payment of tax. TDS is something like payer will deduct from your income and deposit the same on your behalf to the government. Now, advance tax is direct payment made by assessee to the government. So, on my income, I will make direct payment to the government. Now, the name is advance tax. That means I will pay tax on my estimated income during the year in which income is earned. Generally, after completion of previous year, in the assessment year, then Madhav, you need to rectify your last year's return because it is automatic process, my dear friend. You will see in your articleship, your TDS is already automatically reflected in your return. Clear, everyone? Yes or no? Sorry. Generally, what happened after completion of previous year, you calculate your tax liability in assessment year and pay the balance tax. See, my dear friend, you all are getting confused between advance tax and TDS. TDS is deducted by payer. Now I need to calculate my estimated tax liability. From estimated tax liability, I need to deduct amount of TDS. And if the balance payment is more than 10,000, then I need to pay advance tax. Then I need to pay advance tax. Clear, Darshan? It is not like that if I am paying advance tax, then payer will not deduct TDS. Obviously, he will. Say, for example, my income is 50 lakh rupees. Payer will deduct TDS only at the rate of 10%, but I am following in 30% slab rate. So balance I need to pay. So for that, I need to pay advance tax. Clear? I'll give you break at 8:30. So if your estimated income tax liability minus TDS minus every credit comes to more than 10,000 rupees. Say, for example, my income is 15 lakh and entire income is professional service. So TDS is deducted only 1,50,000, right? And what is my actual tax liability on 15 lakh? So my actual tax liability comes to 2 lakh 62,500. Yes or no? But TDS is deducted is only 1,50,000. I need to pay to the government 2,62,500. From 2,62,500, the TDS is 1,50,000. So balance comes to 1,62,500 I need to pay. Now this is greater than 10,000. So I need to pay this 1,62,500 quarterly to the government in the previous year itself. Quarterly to the government in the previous year itself. So if your tax liability after providing credit of TDS, TCS is more than 10,000, then you need to pay advance tax. Advance tax is required to be paid quarterly. For regular flow to the government, Kavita, and see, I will, if I pay 1,62,000 quarterly, then I have the burden, my tax burden is reduced because the quarterly little installment I'll pay the taxes. But if suddenly I need to pay 1,62,500, I have to arrange that. And there is a company of 5,000 crores of rupees income. So it will be difficult for them to pay the lump sum amount of tax. Okay, that's why. Now, the provision of advance tax is not applicable in case of senior citizen who does not have any business income. So if a person is a senior citizen and not having business income, then the senior citizen is not required to pay advance tax. They will pay tax at the time of filing return of income to avoid genuine hardship to senior citizens. Clear? So in case of senior citizen, the condition is they should not have income chargeable under the head PGBP and the age is 60 year or more during the previous year. Then in that case, senior citizen is not required to pay advance tax. Madhav, wait for a minute. I will discuss the interest provision. Mr. X, Mohammed, Mr. X, if Mrs. X has provided declaration to the payer. Now, say for example, if you fail to pay advance tax, then chalo, पहला discuss कर लेते हैं. If you fail to pay advance tax, then you need to pay interest under section 234C for not paying advance tax. So there is an interest for not paying advance tax regularly when you are filing your return of income. Clear, Madham? Bhumika, you need to calculate your tax liabilities. Say for example, on salary and other sources, your tax liability comes to 1 lakh and your employer has already deducted TDS of rupees 1 lakh, then no need to pay advance tax. That I have explained here. Instead of, see here, my tax liability comes to 2,62,500 and TDS is deducted 1,50,000. So balance 1,62,500 I need to pay, and the 1,62,500 is more than 10,000, so I need to pay advance tax. But if the employer has deducted TDS on entire salary and no tax is required to be paid by me additionally, then why advance tax is there? Then why I need to pay advance tax? Now, computation of advance tax, you need to calculate advance tax on your estimated income of current year, because on the starting of the year, you have no idea about the exact income you will earn during the year. Yeah, if you are having regular flow of income, you can know. You know what is your exact income. But in case of business, you have no idea about your exact income. So advance tax is calculated based on your estimated income. Advance taxes need to calculate by yourself only. And if you are paying regular taxes, regular filing your return of income, then you will know what is your income, what is the trend of your income, and you are able to calculate your estimate income and estimate tax liability. Okay. The assessing officer, if you are not paying any advance tax, the assessing officer may provide an order to you to pay advance tax. So if there is loss in your case, you need to provide declaration or estimated computation to the income tax officer, to the assessing officer, that my tax liability comes to 0. That's why I am not paying advance tax. Now, say for example, another example is if assessing officer is calculated your income and issue and based on your past income trend, if assessing officer is calculated your income and tax on that income and pass an order to pay advance tax accordingly, income estimated by the assessing officer. Then in that case, you have to calculate your income, and if your income is more than the income calculated by assessing officer, then you need to pay advance tax based on your calculation. And if your income is less than income calculated by assessing officer, then you need to provide your computation to assessing officer and prove that the income computed by you is correct and not by the assessing officer. Okay. Sudhanshu, you need to calculate your estimated income and tax liability even if you are an individual. Even if you are an individual, if you are having more income, you need to calculate. That's why, my dear friend, practically everyone does not have any idea about calculation of tax liability. They hire a consultant and provide their income statement, and consultant will calculate the tax liability every quarter and advise them to pay advance tax. Okay. While calculating the tax liability, advance tax liability, you need to deduct TDS, right? But you need to deduct only that amount of TDS on which TDS is deducted and deposited. If a payer failed to deduct TDS, then you are not allowed to deduct that amount of TDS from your estimated tax liability. Okay, if payer has not deducted TDS or not deposited the TDS, then it is your responsibility to pay tax on your income. So say for example, on my professional services, payer required to deduct TDS, but he has not deducted TDS. So I cannot reduce that TDS from my estimated tax liability. Okay. Now the due date for payment of advance tax. Say for example, my tax liability comes to 1 lakh rupees after deducting TDS and everything. Okay. So advance tax is required to be paid quarterly, that is on or before 15 June, on or before 15 September, on or before 15 December, or on or before 15 March. So on or before 15 June, I need to pay 15% of my tax liability. So 15% of 1 lakh. That comes to 15,000. So on or before I have to pay 15,000 to the government. On or before 15th September, 45% of tax liability. So what is 45% of tax liability? It is 45,000. 45% of 1 lakh comes to 45,000 minus already paid. See, up to 15 September, I need to deposit total 45% of my tax liability to the government, right? So 45, I have already deposited 15,000. So balance 30,000. I need to deposit on or before 15 September. So this 15 plus 30 comes to 45,000. Okay. So just like you need to deposit to the government 15, 45, 75 and up to 15th March, you need to deposit 100% of your tax liability to the government. Now, if you fail to deposit 15% or 45% of your tax liability to the government, then you need to pay interest under section 234C that we will discuss. Now, if you are opting for presumptive taxation, that is 44AD or 44ADA, then no need to pay advance tax for this 3 quarter. You need to pay your entire tax on or before 15th March. On or before 15th March. Clear? Now let us have a break of 10 minutes. After that, we will discuss interest under section 234B for short payment of advance tax and 234C for short quarterly payment of advance tax. Is that clear? Let's have a break of 10 minutes. Mr. Manish, we are Hello, we are live. We are live. Okay, thank you. Uh, Madhav, yes, if in second quarter, because of some income, your tax liability comes to 2 lakh rupees, then you need to calculate 45% of 2 lakh minus taxes already paid by you. So balance you need to deposit to the government in second quarter. Now, interest for non-payment or short payment of advance tax. So say for example, I'm giving you just normal example. Say for example, at the year end, I already know at the year end, I know what is my actual income, what is my actual tax liability. So at the year end, my actual tax liability comes to 1 lakh rupees. Okay. Up to 31st March, of previous year, if I have already deposited to the government 80,000 rupees, including advance tax, TDS, TCS, etc. Okay, so what 234B says that up to 31st March, you need to deposit 90% of your assessed tax, 90% of your assessed tax, that is actual tax liability, to the government. Okay, so in our case, up to 31st March, I have deposited 80% of my assessed tax. Yes or no? 80,000 comes to 80% of 1 lakh. What 234B says that as per section 234B, if you have not deposited 90% of your assessed tax up to 31st March, then from 1st April onwards, you need to pay 1% simple interest per month or part of the month up to the date of deposit of balance tax. Up to the date of deposit of balance tax. So here I have deposited 80,000 rupees. If I have deposited 90,000, that is 90% of 1 lakh, then interest under section 234B is not leviable. But as I have deposited less than 90% to the government, I need to pay 1% per month interest from 1st April to the date of payment of balance tax. So here the balance tax is 20,000. The balance tax is 20,000. Say for example, I have deposited this 20,000 on 30th June. Okay. So I need to pay interest under section 234B on 20,000 into 1% into April, May, June, 3 months. Okay. So I need to pay that amount of interest under section 234B. Now suppose instead of 80,000, I have deposited to the government 95,000 up to 31st March. Now, do I need to pay interest under section 234B? Yes or no? Do I need to pay interest under section 234B? Yes or no? Please reply everyone. Yes or no? Suppose instead of 80,000, if I have deposited 95,000 to the government, do I need to pay interest under section 234B? No, right? Why? Because up to 31st March, I have deposited more than 90% to the government. Okay. So here the interest is leviable if up to 31st March you have not deposited 90% of your assessed tax to the government. The interest liability would be 1% per month or part of the month from 1st April following the financial year up to the date of determination of income under 143(1) or where the regular assessment is made up to the date of such regular assessment. Because the interest is leviable on balance tax due only. The 90% criteria is for applicability of section 234B. If you have not deposited 90% of your tax liability, then you need to pay interest under section 234B on balance tax amount. Interest is calculated. Here it is given, Madhav. In such interest is calculated an amount of difference between assessed tax and advance tax. Now, what is assessed tax? Is the tax calculated on total income determined under section 143(1), where regular assessment is made. The tax on total income determined under such regular assessment minus, so your total tax liability minus TDS or TCS, any relief given under section 89 or any credit, VAT credit given under section 115 JD. Okay. This section 140B we will discuss in next chapter in detail. Uh, 31st July is for your return filing, not for tax payment. So if you are paying balance tax instead of 30th June, if you are paying this tax on 31st July, then interest is leviable for 4 months. No, interest is calculated on balance tax due. Here it is given. My different point number 3 refer. Interest is calculated on amount of difference between assessed tax minus advance tax, not the balance 10%. But how 18% come? I didn't get your question. The interest is 1% per month. Interest is 1% per month. Clear? Madhav? Madhav, 90% criteria is for leviability of 234B interest. If 90% is not paid, then interest is calculated on balance tax amount. Here. Next is 234C. Manner of computation of interest under section 234C for determination of advance tax by corporate and non-corporate assessing. Now again, here I'll take one example. Say for example, my assessed tax comes to 1 lakh. After TDS, TCS, everything. Up to 15th June, I need to pay 15%, that is 15,000 to the government, right? Total. Up to 15th September, I need to pay 45,000. Total to the government. Up to 15th December, it is 75%, 75. And up to 15th March, it is 100%. So, okay, need to be deposited. Actual deposit. So now up to 15th June, I have to deposit 15,000 to the government, right? That is 15%. Up to 15th September 45, 15th December 75 and 15th March 1 lakh. But say for example, instead of 15,000, advance tax paid by me is 13,000. Here, say for example, it is 40,000. Here, say for example, it is 60,000. And here, say for example, it is 70,000. Okay. So there is shortfall of deposit of advance tax. Yes or no? There is shortfall of advance tax. Yes or no? I have to pay 15,000 instead of 15,000. I paid only 13,000 to the government. Instead of 40,000 total, I paid 40,000 to the government. Instead of 75,000, I paid 60,000. So there is shortfall. Yes or no? So here the shortfall is 3,000. Here the shortfall is 5,000. Here the shortfall is 15,000. Here the shortfall is 30,000. Yes or no, everyone? Everyone clear with the question? Yes or no? Now, on this shortfall, I have to pay interest under section 234C, 1% per month. 1% per month. But here, for first 2 quarters, the government has provided relaxation that instead of 15%, if you have deposited 12%, then for first quarter, interest under section 234C is not leviable. So now, what is 12% of 1 lakh? It comes to 12,000. So I have deposited more than 12,000. Yes or no? Yes. So in first quarter, no need to pay interest under section 234C. For second quarter also, instead of paying 45%, if you have already deposited 36%, instead of paying 45%, if you are deposited 36%, then also no need to pay interest under section 234C for second quarter. So now here, what is 36% of 1 lakh? It is 36,000. I have already deposited more than 36,000 rupees. That is 40,000, right? So in here also, no need to pay interest under section 234C. But no relaxation is provided for quarter 3 and quarter 4. So here the shortfall is 15,000. So I need to pay interest at 1% for 3 months for third quarter, and here 1% for 1 month. Now say for example, instead of 40,000, here the amount is 35,000. So there is shortfall of 10,000 and it is less than 36%, right? So here interest is 10,000 into 1% into 3 months. So the interest under section 234C is leviable here for 1% into 3 months, here 1% into 3 months, here 1% into 3 months, here 1% into 1 month. Is that clear, everyone? Yes or no? Everyone clear with the calculation of interest under section 234C? I'm giving you 1 minute. If you want to write, just write it down. Yes or no, everyone clear with this section 234C? Please reply fast. Tax due on return income means the final tax liability calculated on the income you offered in your return of income. Yes, Madhav, if you are paying 100% in fourth quarter, then you need to pay interest for first 3 quarters. Provided if you are opting for presumptive taxation, that then in that case, first 3 quarters are not applicable. So interest under section 234C for first 3 quarters are not applicable. Yeah, in case of first quarter, if there is a shortfall, then 1% interest per month for 3 months. But here you need for first quarter, you need to check if the 15% is not paid, then you need to check if 12% is paid, yes or no. If 12% of tax due is paid, then no interest is leviable. But if 12% is not paid, say for example here, instead of 13,000, if I have deposited only 10,000, then on balance 5,000, I need to pay interest. I need to pay interest for 3 months. Clear, Bhumika? Same is with the case of second quarter. Clear, Bhumika? Yes or no? Please reply fast. Now, say for example, if you are opting for presumptive taxation, then no need to pay first 3 quarter, as we have already discussed. So no interest is leviable for first 3 quarter. But if there is shortfall in the fourth quarter, then you need to pay 1% interest for 1 month on shortfall. Clear? Now, non-applicability of interest under section 234C in certain cases. See, you calculated your tax liability on estimated income, right? So because of capital gain, say for example, in first quarter, I have no idea about the capital gain I will earn in third quarter, right? So because of capital gain, my tax liability increased, then interest under section 234C is not leviable. Okay. Same is with the case of casual income. Say, for example, in the month of June, I have no idea if I will won the lottery in the month of December or not. So, because of your usual income, if your income increases and your tax liability arise, then for the previous quarters, interest under section 234C is not leviable. That's why while filing return of income, they have provided the quarterly details of capital gain, other sources income, and dividend income. So that interest is not leviable because the income is on in the later quarter. Clear? Everyone clear with the interest under section 234B and C? Yes or no, please reply. Can we move forward to tax collection at source, that is TCS? Yes or no, please reply fast. Varsha, under 234B, see, just for this example, I need to pay 90% of my assessed tax before 31st March. If before 31st March I have not deposited 90% of my tax, then on the balance tax payable, that is here 1 lakh is my assessed tax, 80,000 I have deposited up to 31st March. So the difference is 20,000. I need to pay 20,000 rupees interest under section 234B on 20,000, 1% per month up to the date of deposit of this 20,000 to the account of government. Clear? Varsha. Krishna, under 234C, if there is a shortfall of quarterly deposit of advance tax, then I need to pay 1% interest for 3 month, 3 month, 3 month, 1 month on shortfall amount. That is the difference between amount need to be deposited minus amount actually deposited. Clear? Now tax collection at source, TCS. So seller will collect tax from the buyer and deposit the same to the government on account of buyer. Okay, that is called TCS. See, in TDS, payer will deduct from the payment and deposit the same to the government. And TCS, seller will collect from the buyer and deposit the same to the government. Just like, for example, GST. If you are having lunch at MACD, then MACD will collect GST from you and deposit the same to the government. Just like that, the seller will collect tax from the buyer and deposit the same on behalf of buyer to the government on specified purchases made by the buyer. So applicability and rates are given. You need to remember this table. So if you are purchasing alcoholic liquor for human consumption, then at the time of purchase, the buyer will collect 1% TCS from you. Same with tendu leaves, timber obtained by under forest lease, other than forest lease, any other forest produce not being timber or tendu leaves, scrap, mineral being coal or lignite or iron. Okay. Say for example, if you are selling scrap, okay, then the seller will collect 1% TCS from you. Sorry. Lease or license of parking lot, toll plaza or mine or quarry. Section 2061C provides for collection of tax by every person who grant a lease or license or enter into a contract, otherwise transfer any right or interest in parking lot. Yes, Mohammed, these goods are covered, and the second subsequently we discuss. Toll plaza, mine or quarry to another person for use of such parking lot, then the tax is required to be collected by the recipient from the payer of this lease payment at the rate of 2%. Okay, so say for example, toll plaza XYZ firm is provided toll plaza to ABC firm. Okay, so ABC firm will make payment of for use of this toll plaza to XYZ firm. Yes. So say for example, 1 lakh payment will be made by ABC firm to XYZ firm. then XYZ firm will collect 2% TCS on this 1 lakh from ABC firm and deposit the same to the government on behalf of ABC firm. Is that clear, everyone? Yes or no? Second is sale of motor vehicle value exceeding 10 lakh. So if you are purchasing any motor vehicle and the value of that motor vehicle is more than 10 lakh, say for example, you are purchasing car worth rupees 15 lakh. Okay. Then the showroom owner will collect TCS from you at the rate of 1%. At the rate of 1% on value exceeding 10 lakh. So here, the value exceeding 5 lakh, value exceeding 10 lakh is 5 lakh rupees and the rate of TCS is 1%. So showroom will collect TCS from the buyer on at the rate of 1% on 5 lakh rupees. Is that clear, everyone? The third point is clear. Yes or no? Please reply. Yes or no? Next is overseas remittance or an overseas tour package. Section 206(1) provide for collection of tax by every person being an authorized dealer who receive an amount under liberalized remittance scheme of RBI for overseas remittance from a buyer being a person remitting such amount out of India. Say for example, yes, definitely the TCS credit will be given to buyer only. Now say for example, if you are purchasing foreign tour package, say for example, if you are visiting any country, then you are purchasing overseas tour program package. Okay, then the seller of tour package, will collect TCS at the rate of 5% from you. Say for example, if I am visiting Canada and I am purchasing a tour package from tour operator, then say for example, the cost of tour package is 5 lakh rupees. Okay, then the tour operator will collect 5 lakh rupees from me for tour package plus 5% TCS. Plus 5% TCS. Okay. And another is, say for example, if you want to remit any amount to outside India, say for example, you want to remit 10 lakh rupees to USA. Okay, so you need to purchase USD, right? So in that case, at the time of conversion of USD, in Indian currency to USD, for remittance outside India, the authorized dealer will collect TCS on the same at the rate of 5%. But in that case, the threshold is given. For tour package, no threshold is given. So if you are purchasing tour package of 1 lakh rupees, then also the tour operator will collect TCS at the rate of 5%. But other than tour package, if the amount the remittance outside India is less than 7 lakh, in a financial year, then the rate of TCS is 0 and no tax is required to be collected. But if the remittance outside India other than overseas tour program other than overseas tour program is more than 7 lakh rupees. Say for example, it is 8 lakh. Then on amount exceeding 7 lakh, that is on 1 lakh, the authorized dealer will collect TCS at the rate of 5%. TCS at the rate of 5%. Is that clear, everyone? Yes or no? Now, if you are remitting out of India for repayment of loan taken from financial institution for education purpose, if you are remitted amount out of India for repayment of loan for education purpose, then in that case, if the remittance is more than 7 lakh rupees, the dealer will collect TCS at the rate of 0.5% on amount exceeding 7 lakh. Okay, the authorized dealer will collect TCS at the rate of 0.5% on amount exceeding 7 lakh rupees. Yeah, if it is less than 7 lakh, then no TCS is required to be collected. But in case of tour package program, even if it is of 50,000, TCS is required to be collected at the rate of 5%. Okay. No TCS by authorized dealer on an amount in respect of which the sum has been collected by the seller. See here, in point number 3, there is a statutory update. So this notification is not applicable. This notification is not applicable. See, if the buyer is central government purchase the foreign government, if the government will make the foreign remittance, then TCS is not required to be collected. Also, statutory updates. Instead of that notification, this notification is applicable. Notified that 206C1G will not be applicable to person being buyer who is non-resident in terms of Section 6. So as per Section 6 of Income Tax Act, if a person is non-resident and does not have a permanent establishment in India, then TCS is not applicable. Okay, so if a buyer is non-resident and does not have any permanent establishment in India, then TCS is not applicable. 1% on value exceeding 10 lakh rupees are available. Clear? Sale of goods value exceeding 50 lakh rupees, we have no, for tour of package operator there is no threshold. On all transaction, 5% TCS is applicable. This provision we have already discussed along with section 194Q in previous lecture, right? Just I'll give you the brief idea. If the seller is having turnover in the last financial year more than 10 crore, and in current year, if he is receiving more than 50 lakh rupees from the buyer on sale of goods, then he need to collect TCS at the rate of 0.1% at the time of receipt on value exceeding 50 lakh. If TDS is applicable under section 194Q, then TCS is not applicable under section 206C1H. I have explained this provision along with the chart in previous lecture. Everyone, yes or no? Everyone remember that chart I have made for 194Q as well as 206C1H. Yes or no? Please reply fast. Please reply yes or no. I made one chat for 194Q that is applicable to buyer, 19206C1H that is applicable to seller. We have already discussed this provision in detail in the previous section, previous lecture. Okay. So if buyer has not provided PAN to the seller, then seller will collect TCS at higher rate under section 206C, 206CC. Okay. See, 206AA is in case of TDS. We have already discussed that, the higher rate. Here also, if the buyer has not provided his PAN to the seller, then seller will collect TCS at higher rate. That is the twice the rate prescribed in the relevant section. So if the rate prescribed is 1%, then if the PAN is not provided, then TCS is required to be deducted at 2%. If the rate is of TCS is 5%, if the PAN is not provided, then the TCS is collected at the rate of 10%, twice the rate or 5%, whichever is higher. And in case of 206C, instead of 5%, the higher rate is 1%, right? So PAN is compulsory. You need to mention PAN in all the documents. Again, a higher rate of TCS for non-filer of income tax return. It is the same provision we have discussed under section 206AB earlier. See, if the specified person means if a person who has not furnished the return of last assessment year and the due date for furnishing return of income for last assessment year has expired, and in last assessment year the total TDS or TCS on account of that person is more than 50,000 rupees, then in current year the seller will collect TCS at higher of 5% or twice the rate prescribed in the provision of Act. Okay, this is applicable in case if the buyer has not filed his return of income for the last assessment year and the due date for last assessment year has already expired. Now the certain guidelines are given by CBDT, certain clarification. Let us discuss whether TCS at the rate of 1% is on sale of motor vehicle at retail level or also on the sale of motor vehicle by manufacturer to dealer or distributor. See what happens. Say for example, we'll take the example of Suzuki car. Suzuki is a manufacturer. He supply the car to the dealer or distributor, and distributor will further sell this car to retail customer. In this transaction, that is dealer to retail customer, TCS is applicable on value exceeding 10 lakh rupees. 1% TCS is applicable. But will TCS is also applicable in case of manufacturer to dealer, yani Suzuki car to dealer? Yes or no? No. So CBDT has provided notification that TCS is not applicable in case of car provided by manufacturer to dealer for the distribution. Whether the TCS is applicable only in case of luxury car? No, it is applicable to all the motor vehicle, all the car value exceeding 10 lakh rupees. Whether TCS at 1% is applicable in case of sale to government department, embassy? Yes or no, everyone? No. No TCS is applicable if the sale is made to government, embassy, consulate, etc. Whether TCS is applicable on each sale of motor vehicle or on aggregate value of sale during the year. So it is each value. You need to check the 10 lakh limit for car. Say for example, Mr. X is purchasing two cars. First car is of 12 lakh and second is for 5 lakh. So TCS is applicable only on this 12 lakh car, not on 5 lakh car. Okay. Whether TCS at the rate of 1% is on sale of motor vehicle is applicable in case of an individual? Yes, it is applicable. If the value of car is more than 10 lakh, then it is purchased by partnership firm, individual, company, TCS is applicable, right? Now, if you are making payment in installment, then also TCS is applicable. You need to, the showroom owner will need to collect TCS at the rate of 1% on value exceeding 10 lakh. It is on value exceeding 10 lakh rupees, not on the method of payment. Okay. Now for 206C1H, if see, motor vehicle is also sale of goods, right? So here the specific section 206C1H is given, therefore 206C1F, that is sale of goods value exceeding 50 lakh rupees, is not applicable. No, Mohammed, you are remitting from outside India now. If Mr. X want to remit to outside India to his son, then who is purchaser? Mr. X. Now, the time when the collection of tax is required to be made, so it is to be required when debiting the amount payable by the buyer or at the time of receipt of such payment, whichever is earlier. In TDS, it is credit or payment, whichever is earlier in majority section. Here, debit in TCS, debit or receipt, whichever is earlier. No, Krishna, it is 0.1% from starting. It is 0.1% from the date on which section is inserted. See, if a buyer provide the declaration to the seller that the product purchased, that is the above mentioned products are purchased for further manufacturing or processing of article or thing, then TCS is not required to be collected. Okay. This declaration need to be filed on or before 7th of the month following the month in which declaration is furnished. Now, just like TDS, you need to pay TCS collected to the government. Yes or no? The due dates are same. If the payment is made without production of income tax challan, then you need to deposit the same on the same day on which the TCS is collected, and where it is deposited by income tax challan, then on or before 7 days from the end of month in which TCS is collected. The difference of TDS and TCS is given. Just go through once. Now, let us discuss the practice question. We'll discuss quickly. Summary is given. So come on, page number 9.140. That is practice question. Now you need to answer, okay? Ashwin doing manufacture and wholesale trade furnish you the following information. Total turnover for the financial year Financial year 21-22, 1 crore 5 lakh. Financial year 22-23, 95 lakh. Examine whether the tax deduction at source provision are attracted for the below sale expense incurred during the financial year 22-23. Interest paid to UCO Bank on 15/8/22, 41,000. Chalo. In first case, Mr. Ashwin make payment of interest to UCO Bank. Whether TDS is required to be deducted, yes or no. First thing, my dear friend, in the last financial year, that is financial year 21-22, his turnover is greater than 1 crore, right? So in current year, the turnover in the current year is not relevant. So current year, if you make any payment, TDS is required to be deducted, right? But here the TDS is not required to be deducted because under section 194A, the exception is given that if you are making interest payment to bank, cooperative society, banking company, financial institution, then TDS is not required to be deducted. Remember, yes or no? So in first payment, TDS is not required to be deducted. Contract payment to Raj, 2 contracts of 12,000 each on 12/12/22. Chalo, in second case, whether TDS is required to be deducted, no TDS is required to be deducted under section 194C. Why? Because the payment is made for 2 contracts, but the value single bill is less than 30,000 and aggregate is less than 1 lakh rupees. Therefore, no TDS is required to be deducted. Shop rent paid, one payee on 21 January 23, 2,50,000. Chalo. TDS is required to be deducted under section 194I, yes or no? Yes. Why? Because see, last year the turnover is more than 1 crore. So section 194I is applicable. The threshold under section 194I TDS on rent is 2,40,000. Here the rent for the year is 2,50,000, which is more than threshold limit. So TDS at the rate of 10% under section 194I is applicable on 2 lakh, on entire 2,50,000, right? Commission paid to Balu on 15/3/23, 7,000. Is TDS is required to be deducted? No. Why? Because the amount of commission is less than 15,000, that is less than threshold limit of mentioned in section 194H. Clear everyone? Clear with the question number 1? Yes or no? Next, compute the amount of tax deduction at source on following payment made by Messrs. S Limited. See, here the payer is a company, so we need to check whether TDS is applicable or not as per the given section. As per the provision of Income Tax Act, on 1/10/22, payment of 2 lakh to Mr. R, a transporter who owns 8 goods carriage throughout the year, and furnish a declaration to this effect along with his PAN. Now here, exception is given under section 194C if a person is carrying less than 10 goods vehicle and furnish a declaration, then TDS is not required to be deducted under section 194C. Yes or no? So in first case, no TDS is required to be deducted. Payment of fees for technical service 25,000 and royalty 20,000 to Mr. Shyam, who is having PAN. TDS is applicable or not? So we need to check 30,000 limit individually. Yes or no? So here 30,000 for royalty, 30,000 for fees for technical service. Less than 30,000, no TDS is required to be deducted. On 30th June 22, payment of 25,000 to Messrs. X Limited for repair of building. Chalo, TDS is applicable or not? No, because the bill is less than 30,000. So no TDS is required to be deducted. Next, on 1/1/23, payment of 2 lakh made to Mr. A for purchase of diaries made according to the specification of Messrs. S Limited. However, This line is very important. However, no material was supplied for such diary to Mr. A by Messrs. S Limited or its associates. So it is outside the definition given under section 194C for work, right? So TDS is not applicable. Next, payment of 2,30,000 made to Mr. Bharat for compulsory acquisition of his house as per the law of state government. Chalo, whether TDS is applicable or not. Here also TDS is not applicable because as per section 194 LA, compulsory acquisition of property, the threshold is 2,50,000. Here it is less than threshold limit. Therefore, TDS is not applicable, right? Next, payment of commission of 14,000 to Mr. Y. Also, it is less than threshold limit 194H. It is 15,000. So, no TDS is applicable. Everyone clear with this? Yes or no? Question number 3. Examine the applicability of TDS provision and TDS amount in the following case. Rent paid for hire of machinery by B Limited to Raman 2,60,000 on 27/9/22. Chalo, here TDS is applicable or not? Yes, because under section 194I, TDS on rent, the threshold is 2,40,000. It is more than 2,40,000. So on 2,60,000, TDS is applicable at the rate of 2%. Yes or no? On rent of plant and machinery, the rate of TDS is 2%. Other than plant and machinery, the rate of TDS is 10%. Next, fees paid on 1/12/22 to Dr. Srivastavan by Sundar HUF 35,000 for surgery performed on member of the family. It is for personal use. Yes or no? So no TDS is required to be deducted. Right? See, the HUF, the business details are not given. So 194J is not applicable. If we assume the turnover in the last year is less than 1 crore or professional receipts less than 50 lakh, then 194J is not applicable. 194M is also not applicable because the value of services is less than 50 lakh rupees. ABC and company paid 19,000 to one of its director as sitting fees on 1/1/23. Whether TDS is applicable or not? Yes, because there is no threshold limit for sitting fees to the director, right? I have specifically mentioned when we discussed the section 194J. Right, so the deducted under 194J, rate of TDS 10%. 19,000 is the value of fees. So 10%, it comes to 19. Question number 4. Examine the applicability of tax deduction at source provision, the rate and the amount of tax deduction in the following case. Payment of 27,000 to Chekas Kalis, a South African cricketer, by an Indian newspaper agency on 2/7/22 for contribution of article in relation to sports of cricket. As per section 194E, any payment made to non-resident sports person, TDS is required to be deducted at the rate of 20.8%. There is no threshold given. Right, so 27,000 into 20.8%, TDS is required to be deducted. Payment made by company to Ram, subcontractor, 3 lakh, with outstanding balance of 1,20,000 shown in the books as on 1/3/23. Now the payment made is 3 lakh, right? And still 1,20,000 is outstanding. So total comes to 420. So TDS is required to be deducted at 1% on 4,20,000 because as per section 194C, if the payee is individual, the rate of TDS is 1% and TDS is required to be deducted at the time of payment or credit, whichever is earlier. So 3 lakh payment is made and 1,20,000 credit was done in the books of account, right? That's why it is on 4,20,000. Winning from horse race, 1,50,000 paid to Shyam and Indian resident. State 30% casual income, 30% TDS is applicable. So 1,50,000 into 30%, 45,000 TDS is required to be deducted under section 194 double B. 2 lakh paid to Mr. A, a resident individual, on 22nd Feb 23 by state of Uttar Pradesh on compulsory acquisition of his urban land. Again, my dear friend, it is less than 2,50,000, so no TDS is required to be deducted. Briefly discuss the provision relating to payment of advance tax on income arising on capital gain and casual income. So in the quarter in which the income arises, in that quarter you need to pay tax on that, on such casual income, and 234C is not applicable for previous quarters if the income is earned through capital gain or casual income, right? Last question. Mr. Joy, having total income of 8,70,000, did not pay advance tax during the previous year. He wished to pay the whole of tax along with interest, if any, on filing the return in the month of July. What is total tax which Mr. Joy has to deposit as self-assessment tax along with interest if he filed the return on 29/7/23? Assume that he does not exercise the option under section 115 VAC. So first we need to calculate tax liability on 8,70,000, right? So what is tax liability on 8,70,000? $12,500 plus 3,70,000 into 20%. So it comes to plus 4% cess. So it comes to 89,960. This is the basic self-assessment tax liability. Now he has not furnished. See, here the tax liability is more than 10,000. No TDS is deducted, right? So he need to pay advance tax. There is a default in payment of advance tax. So section 234B and C, interest is leviable. Now as per section 234B, up to 31st March, you need to pay 90% of your tax liability. In this case, he has not paid any tax liability till 31st March. He paid all the tax liability on 29/7/23, right? So we need to calculate interest under section 234B on for ignoring fraction. They have considered this 89,900 into 1% into April, May, June, July, because on 29/7 while filing return he paid taxes 4 months, right? So 3,596 interest is required to be paid under section 234B. Now under section 234C, he need to pay quarterly installment, but he has not paid. So there is a shortfall. So 15% is 13,400. It is 40,400. It is 67,400 or 89,900. It is 15% of 89,900, 45% of 89,900, 75% of 89,900, and 100%. So there is, he has not paid any interest, any tax as an advance tax or TDS or anything else. So on 13,400, 1% per month into 3-month interest is required to be paid. On 40,400, 1% per month, 3 months, 67,400, 1% per month, 3 months, 89,900, 1%, 1 month. So total interest under 234C is 4,535. Total interest under section 234B is 3,596. And tax liability is 89,900. So total he need to pay 98,000 to the government along with return. Clear everyone? So here the TDS chapter is over. In next lecture, we'll discuss provision for filing return of income. Have a good day, everyone.